Good morning and welcome to the Early Bird, and we'll make this one pretty quick because it's pretty simple all around. This is the DAX here, and it's sitting on 5,000. We'd seen the first bounce come back up here, and that's important. Now, if this market makes a new high above this first bounce level, then we're going to have a deeper correction into this area here before any downside. Otherwise, the next bounce will be capped lower, and if that's the case, then each one will be lower, then it will drop through there. So that's just something very sort of simple to watch. In terms of all the indices there, it's all pretty well straightforward. This is the S&P 500 here. I might just bring up the US market first. It's a bit simpler. Essentially, you can see from here that we've got down for wave 1, back for 2, down for 3, 4 and 5. When you get the extension in the third, then waves 5 and 1 will be about the same. So look, we've got 5 waves down here. So we'll get a 3-wave counter trend now. So we'll get an A and a B and a C. Now, how far will it go? Well, that's a bit of an unknown, really. The norm that everybody will be looking at is a 61.8 retracement level from that high down to this low, back up to here. So that would bring us up around the 11.2 there. But look, it could be anywhere from reality bites, anywhere from up to the supply levels up at 11.3 here, also all the way down to something very shallow within hitting this trend line through here at 10.9, also sort of supply coming in around this area here. So if it gets support on 11, then we've really got to consider it coming up this high here, and that would mean that any short positions we have in the market, if it found support on 11,000, then we need to bring down those stops and lock in what we've got, get out basically, and wait for this to come back up here and then sell from that point. So all of this in here is a little bit of an unknown, and that's what we'll be focusing on this week. So we may have a shallow retracement into this area here and then down, or we could go further up into here. So that's pretty much it, really. It's that simple. We can't give you a very clear answer until we actually see it taking shape, I guess. It's a little bit different with the Australian stocks. Yes, they sort of will bounce, but there is a lot of momentum sort of pushing them down as well. Not so much with our indice actually. So it's the same for the UK market as well. Slightly different wave count in terms that we've already got like this wave 1 down through here from that high up there. So we got wave 2 here, and I'm just assuming this is wave 3 all the way down to this point here. But if wrong, then this is wave 3 here, that's wave 4 there, and that's wave 5 there. Possible. But either way, it will just follow the other markets as well. So the resistance area would be in this area here, but it may not even get passed up here. But anyway, a short won't come from this area here unless it comes up here or it gets locked under the 5,000 there. And when it comes to our market as well, the ASX 200, it's sort of dragging its feet. It should have dropped much quicker than what it has done, so it could bounce back quite sharply as well. But what we should be looking for here, I guess, in a bit of a nutshell, is a retest of the 4,000 here. That would only be natural for it to do that. So we have to go through that process back to here and then down. So any day traders that are looking at this would be looking for support above the 3.9 and also the 39.30 as well, the top of group 1 there, to get back up there further. But the trend is down, the wave count is down, and when we have a look at it in terms of the SPY, it's there's a couple of ways to look at it. Probably better off staying with something that's got the lines on. It's a bit easier. So this is the SPY here. Look, as long as it stays above here, then you would go long on the open and look for support on the 3 here as a retest back to there. But we're considering this this whole move here corrective in terms of an A and a B and a C wave coming back up, and a C wave would come back up to the previous point up here before it goes over. So it may not touch back in here, so just be aware of that. Anything that locks under the 3.9, well, then you're short. Anything that locks under the 72, then you're short as well. So yeah, look, that's it really for the indices, and we're just really going to watch the Dow Jones play out from that particular point there. This one here, this is going to be our focus on the S&P 500 as well. This ABC that we get in there will be a 5-3-5 structure. and here it is on the S&P 500 as well. So we'll see it come back up into the 1172 area here. Possibly it may even come back just up to these areas here. You just don't know. That's the 61.8 retracement level up through there as well. Gold is just following stock at the moment, and that would be its wave count to the downside there. So this is the medium level through here now. So we'll see a series of 3, 4, 5 to here to make the third here, then the fourth to here, then the fifth to here of the larger third wave here, then the fourth and the fifth. So we can see this coming down further. Definitely a nice third wave coming in down through here in terms of down for 1 and back for 2, down for 3, 4 and 5 into here, and then so forth through here. So that's what we should sort of see there, and that will follow the indices there as well. And copper's much the same as well. This is important in the bigger picture here. This is a 2-hour chart here. This is our market in terms of the XJO and the Australian dollar, so to speak. So we've got this big wave 1 down to here and wave 2 to come back here. So then we've got down for wave 1, back for wave 2. Then inside that we've got 1 and then 2 and then 1 and then 2, then 1 and then 2. So it's really, there's different degrees of structure unfolding here. So this is still unfolding to the downside, and we can expect this to come much lower down through here into this area here. Sure, all these 10, 20 and 30 here, all group 1 here, they will act as a filter and slow the market down, but that's what we're looking at there. So there's still more downside in the base metals, and that's the important thing for the Australian markets to follow, basically following this structure here. And the oil will be doing much the same as well. We've talked about this in the bigger picture, and it's just unfolding to the downside, and it will just basically do its thing. So there's selling pressure there, and there's still more to come. It's just going to be a bit of a bumpy ride through this area here as it follows stock. Now, in following stock, the stock market's going to have a bit of a rally. So, we're going to see support come in through here. How far it goes back, will it find support on top of group 1 here, 1, 2 and 3? If it finds support on here, then we have to look higher, but I don't think that's going to be the case. But it just depends on how high rather the S&P 500 and the Dow Jones actually rallies. The Shanghai and the other markets in our region are in the same sort of boat as our market, following the base metals, so to speak. And we can see that looking at copper, that is down. There's no question about that. And it will go through a series of waves 4s and 5s. The other side to the markets is the US dollar. And what we're looking at through here across the 78, we're looking basically up to the 80 here. We can see that this is a corrective pattern here, because you can see that it's in 3 waves here, and it's after an impulse wave. So we're considering this sort of wave 4 here. Now, what I don't know is that this A, B and C here could just be still part of just the early parts of the correction, but I don't think so. I think that this is big enough to the right sort of size in terms of proportion and ratio to this move here. And the other thing is that this is quite simple as an ABC, and which is quite fitting really, because this structure in here was complex. This one here can afford to be simple, but it's a 4th wave, and 4th waves can get really, really ugly. They can get really messy. So we don't know just yet if this ABC is finished at this point here. Yes, it can be. The structure is there, but it can just sort of double in size. So any trading to the upside here, if you're going to go short in the euro, for instance, then you would want this 79 as support here and moving up from that there, and that would be the same with the Australian dollar as well. So we still may see a pullback into here, into 78.50 here. So while this is coming back under here, we're going to see stocks rally, we're going to see Australian dollar rally, those sort of things here, until this correction is done and dusted. We knew that we'd get it when we got to 79 here and unfolding, and that's what it's doing. So we don't know if it looks like it's done, but we need it as support now to confirm any trade setups from that point there. So as that correction is there, the The euro has got its correction as well from this point here. So if that's done and dusted on the other side there of the dollar, then look for the 135 here as resistance, and then use the 13472 as a resistance to add to short positions, with the idea of this low being taken out through here. The weekly robo rather, for the euro. Just remember, we were shorting. This is a weekly chart here, so we're just moving the stop down through this area here. Now we do have, there's been daily short positions from this way up above the 144 here where we started the short position, but this is just still going. We've flipped over to the weekly, we'll probably flip over to the monthly at the right time too, when anything sort of shapes up. But you can see that it's moved quite quickly down through here, and now it's sort of slowing down a bit. So as the US dollar hits the 80, then we'll also need to lock in some profits over this side as well. But any longer term trades, if you're really going for, you know, the really big long trade in this, then we'd be looking for support to come over 80, because we'd be looking to take out not only these lows but further lows over there as well. So this is really just the beginning of it here. So we don't really, you know, we want to manage it, but we don't want to be flicked out of the trade in total. So we'll put a bit of thought into that and get back to you on that one there. But we want to hold for the rally and then add into the rally for the next downside here, with a much longer term view of all of this being taken out here and further as well. So a bit of a historic trade coming up here on that one there. The Australian dollar, this is pretty much the wave count here, in terms of, we're looking from this 107.50 high here roughly, then we're looking at this 5-wave structure coming down, this 1, 2, 3, 4, and 5 to here. Now that's debatable as well. The other side to this is down for 1, back for 2, down for 1, back for 2 as well. So there's actually a big account that could possibly fit into here as well. But we'll just see how we go with all of this here. As we know, we've come through the $1 through here. So if we just bring this up on a sort of an intraday basis here, the main trend is down. It's just about choosing your time frame and moving in there as well. So this is very much like the ASX here. So look, any support on top of the 98 here, then you could scale in through group 1 here. If support came on top of 98.30 and it's solid, nice support, then you can move in further up there. You can expect a 38.2 retracement level from that top of that wave 2 there at 103. Down to this point here, and 38.2 retracement will take you in around, I guess, around this area here. But you know, this would be seen as a retest of $1, and large numbers can skew wave counts a bit as well, so we just need to be aware of that. But what we can do is we can take the rally in the Dow, the S&P 500, the UK market and so forth, relate them to our ASX 200, the cash market, and then relate it to this market here as well. Now the bend in the line for all of this would be bringing base metals into the picture, and that would be copper in this case. We can bring that in, but yeah, so that would just sort of help a little bit with it as well. So keep an eye on that. Okay, that's really it really. So it just really boils down to the US 30 here doing an ABC correction, so an A and a B and a C. Just don't know where it's going to go yet. We just need a couple of sessions for that to line out. And if we're looking at our local market in terms of the short positions we've got in there, then we really need to get, like we did last week, we had to, and the week before, we're trying to get from one week to the next week with our short positions, because we're trying to capture a decent trade within all of this. You know, if there's going to be a trend and we're sure about it, then we need to cash in on it. So that's what we've been doing, and we'll continue to do that. And our job really this week is to survive the small rally and get through to next week. So, you know, there's just different ways of tackling that situation, you know, but you basically want to try and get your trade to break even and then have that free trade from there, or only hold on to small losses that aren't going to bring tears to your eyes, so to speak. Okay, that's it. So it's that simple. We're just looking at an A and a B and a C rally from here and then rolling down to the lower side here. The ASX 200 could rally back to the 4,000 as a retest there. The Australian dollar back to $1 as well as a retest there. We just don't know how high everything's going to rally, but we just need to just lock in some profits on the Monday if you need to, on the morning on the open, and then we'll take it from there. There was very light volume pushing stocks up when you have a look at CBA and BHP and so forth. So there wasn't a lot of volume coming in as support there, but we'll see what comes in on the Monday there. All right, that's it. So just stay cool and ride the rally, and look to add in short into the rally, and we'll be on our way down again. Alrighty, cheers.